And if you talk about sparkling, shares of Harry Winston have been on a run this year, basically flat today, but up about 30% since January. And Harry Winston is one of several companies looking into creating a diamond fund. Yeah, possibly an ETF for diamonds, similar to what has been done for gold. So are diamonds the next hot class of ETF? What about asset class? Let's ask Tom Lydon, editor of ETF Trends, and Oliver Chen, accessory and luxury analyst at Citi, and a new face to CNBC. So welcome, Tom. I'm going to start off. I'm going to start off with you because gold is gold, right? I mean, I can get gold over here, get gold over there. It's probably going to be the same thing. Diamonds can be very different, right? With the four C's, is there any way to sort of commoditize them into a fund, or are they simply all just way too different?
Well, that's what it is. And when you talk about pricing, gold's liquid. It trades on the futures market. You can trade intraday, and there's been almost no problems with the gold ETFs. But when you get to diamonds, it's a whole different story. As you say, diamonds aren't created equal. There's so many sizes, shapes, qualities. And the other thing is there's no standard pricing, especially on the futures market. So the company, Index IQ, that's got the filing with the SEC for the only and first gold, diamond-related ETF, although I think there'll be demand, the problem will be in the pricing.
Yeah, so we look at the pricing then. Is there any way that you see to standardize it, Tom? Is there any way to do it at all, to make it, because they're trying to do this with patents, right? Make it standardized enough. It could be, because if you can create the ETF, you've got to increase demand for diamonds, right? Because diamond demand will spike. This is what happened with gold. Gold just took off as soon as an ETF was created.
All right, Brian, when you talk to the World Gold Council, the best thing that ever happened to gold were the gold ETFs. However, there's a different feeling on the diamond producer side and diamond wholesalers. They like the fact that pricing is not always clear. That's basically how they're making their money. But when you look at these ETF providers who are trying to get into the space, to a degree, it's the tail wagging the dog. They're trying to force the industry to have standardized pricing. And the first way they're going about it is creating shares or blocks with just 1 carat diamonds. However, the variety of diamonds within that group are going to be quite different.
Sorry, Tom, I don't mean to cut you off. Finish that thought.
Yeah, the other thing is it's only going to be priced at the end of the day. So far, if this filing comes out and there is a diamond ETF, it could trade at a discount or premium over the course of the day. And as we all know, that's one of the negatives that we've seen in the ETF marketplace.
Oliver, what's your take?
Sure. At Citigroup, we are excited about the fundamentals of the diamond industry. We do think supply is growing at low single digit versus demand at 6%. Regarding an ETF, I would be cautious for a few reasons. One, I agree with Tom in that 1 carat diamonds can be priced anywhere from $200,000 to $20,000. I would also say that diamonds for end use tend to be 98% consumer versus gold at 50%. So there could be a lot of volatility on those supply and demand characteristics. And thirdly, within the context of the diamond market, De Beers and Alrosa still have chunky market shares. On a combined basis, that's 60%. So it's a relatively non-fragmented market, which is a unique characteristic in contrast to gold. We are recommending Harry Winston. We do think it's a unique way to play diamonds. It is 0.68 correlated to the diamond prices, and it's a diamond specialist company, which both has a mine and a very attractive luxury retail side. We think this is a good way for people to play.
And Oliver, I didn't even know until I read your stuff that they mined. I just assumed they were, the Gap, essentially, selling high-end jewelry. You think the mining business is essentially 60% of the value of Harry Winston.
That's right, Brian. It is a mining company, and it started out as a mining company, and they do have this jewel of an asset, the luxury retailer, which we know on Fifth Avenue. But the Diavik mine is a very attractive asset, and I think it's worth at least $12 per share, and my price target on Harry Winston is $17. So the correlation is quite strong to the commodity and to the mine.
Tom and Oliver, gentlemen both, thank you very much. We'll have more of the diamond discussion, I'm sure, at some point.